So that's about it for our fifth wave in here. I'm using this parallel channel, the fib pull from here to here, and this red line that we drew is the top possibility for this to hopefully see the fifth wave fall into here. In other words, I'm bullish from about this $328 range all the way up to about $370. About 2 weeks ago, I released an in-depth technical analysis look at SPY. As we were falling downwards and everyone thought a crash was coming, I wanted to see where I thought the bottom might fall in. Now, if you've already watched that video before coming here, then this chart looks familiar to you. I haven't really moved anything around here, and my box over here for where I think our next wave is going to fall in hasn't changed at all. I'm going to do a quick recap here for anyone who missed the last video or wants to hear it again, just to show you why I had my target in this box over here. And after that, I'm going to tell you if I think this prediction is still valid, if I think it's going to hold this price range in here, and if so, where are we going to head next? Is my 5 box up there still correct? So let's dive in and take a look. To keep my chart clean, I really only have Elliott wave theory and a parallel channel drawn on my chart. The parallel channel is derived from connecting the 1 up here to the 3 up here, and I need to pull it just a little bit to catch that wick, and then I pulled it down to the 2 down here. Now, sometimes in Elliott wave theory, the 4 is caught by this trend line. However, it's pretty common for the 4 to break through the trend line and put in a new low below it. If you were watching this in real time with me, you might have thought that this bounce right off of here was actually going to be our low and that we were heading upwards from there. However, I thought this was a little bit shy since I had my box drawn down here and I trusted my previous analysis and why I had came to this conclusion, so I was still looking for this last leg downwards. So let's zoom back out here and see why I'm deriving this box. The very first thing I would do when looking at this is pull a fib retracement from the bottom of this 2, this wick down here, to the top of this 3 here. So you just click at the bottom of the 2, click at the top of the 3, and I'm going to extend rightwards to get some Fibonacci retracement lines. We know that the 4th wave is really common either at the 38 here or the 50, with the 50 being my favorite spot to see a 4th wave, or really my favorite spot to see any wave. This is a really common Fibonacci retracement zone that lots of algos are trading based off of. In other words, there are computers who are buying millions and millions of dollars as soon as we get to this 50 retracement every single time, so it's really going to help it be a strong support. And as you can see, if I just zoom into that, you can see that's right about where I had drawn my box, just a little bit above the 50. Sometimes these algorithms will actually front run the 50, so they'll buy just before we actually touch the 50, so that anyone who is looking at the 50 would miss the order. And as you can see, this wick shows just that. The wick comes just about 20 cents above the actual 50 retracement here. So now, why did my box extend all the way to down here? Let's take a look at one more pull here. I'm going to use the trend-based fib extension tool, which is just comparing the relative length of one move to another one. All I'm going to do is click at the top here, and then click at the bottom down here. So this is measuring the relative move of this entire length that we had, and then I'm pulling it to the top up here, this little wick that we have in there, and pulling to the right. Now, some common ratios, if this is going to be the end of our C wave, this would be labeled as an A wave here, maybe this is our B wave, and then this is our C wave. Some common ratios are this golden 618 that you can actually see falls at the bottom of my box right there, and then this 1.0, this pink line right here. Those are the 2 most common zones. And so since the previous 50 here and this 618 from this pull overlapped in this general area, I included them both in this box I had drawn. The very last piece of confluence that I looked for, and confluence is basically just agreement in a whole bunch of different technical analysis tools, was just simple support and resistance lines. So if I just extend this upwards a little bit and we try to look for some strong zones, you can see that this was a pretty key resistance in here. We had broken this all-time high, started to come back up, and then this 327 level was resisted for quite a while in here. And finally, once we broke above it, we basically used it as support in here before we continued upwards again. So I wanted to include this pink line in the box. Luckily for me, it's already inside of that zone that I had drawn. So that's just a quick recap of why I have this box right here and why I predicted it as my 4th wave. Let's zoom in on a different time frame here and see if this actually makes sense. Did we actually complete right at the top of the box I had drawn? The first thing you can notice is that the wick actually goes right into the top of the box. Now, I'm not showing you this to brag about it, to say that I caught this right to the penny there. It's more to show you that if you study technical analysis and you use these probabilities together, you'll actually see this happen all the time, where the price action is so precise and so perfect. Okay, let's see if we can validate this move down and see if we actually are done here. The first thing I can see is at the very bottom candle there, if you take a look at the volume, it was increasing all the way up until that candle where it's kind of a little spike in this lower volume area. It's a higher volume candle than the ones around it for a good hour before and after. Typically reversals come on volume climaxes, so this is already a really good sign. The next thing I'm noticing is just the shape of this candle. This candle at the bottom here is known as a hammer candle, where the bottom part of the candle is almost entirely a wick. The candle closes green, and the top of the candle has an open and close that are very similar and almost at the top of the candle itself. Hammer candles are known as reversal candles, so this is another bonus sign here. So we've got the candle coming into the confluence zone that we had already drawn. We have it as a hammer candle. It has pretty good volume. Now we just need to validate that it can be a fourth wave and Elliott wave. Just at first instinct when I look at this, I think to label this whole move down here as the A wave, it's pretty impulsive. This whole thing is our B wave, which I think is going to be an expanded flat, and then finally our C wave. There are a couple different polls I like to do just to see if I'm on the right track here. The first is a Fibonacci retracement from the top here down to the bottom of my A wave, and I'll just pull it sideways. And when we have a zigzag of our ABC structure, which is basically when the A wave is an impulse, the B wave is 3 waves, and the C wave is another impulse, this 38 to 50 zone, once again, just like our previous 4 wave, are the most common spots. And you can see the B comes perfectly to the 38 here. The second thing I like to do is pull a parallel channel. So we'll grab one here, and all you want to do is pull it from the top of the A wave, the peak, to the top of the B wave here, and down to the bottom of the A wave here. Now in an ideal world, the C comes to the bottom of this parallel channel, but that's also way further down and way past our confluence zone. One other spot you could look for in the parallel channel is this median line. First off, was it significant in the past? And I think it's pretty hard to argue that it wasn't. In this first bounce back upwards, the median line caught this, caught it in here, caught this move all the way through here, and then finally as we came back down, we're now at the median line again. So it was resistance all through here. Are we finally using it as support? Well, that's just another piece of the puzzle that could help us out here. And then lastly, is this valid? Does this actually look like an ABC? Well, I think it's hard to argue that this is not an impulsive move. I could count this in a whole bunch of different ways. I don't think it's really beneficial to do so. Arguing that this is not an impulse is pretty tough, so I'm going to just say that this A is good. It looks good to me. As I said before, I think the B wave here is an expanded flat. What this basically means is that we have a move upwards, a move downwards that goes past the start of the previous move here, and then similarly on the other side, this move goes past the top of this. So this gets labeled into a smaller A, B, C. These expanded flats are extremely common, so there's nothing wrong with this. I like the look of it. I'm going to move forward. The last thing we need to validate is the C and impulse here. Is it potentially a 3-wave move instead? Again, this move is pretty sharp downwards, pretty strong. I think it's hard to argue this is some sort of correction, unless you were to label the A down here, a very small B, and then a weird looking C in here. I think it's better to just call this an impulse. The other option here is that the C wave only has 3 of the waves in. So maybe it's something like this, where we have 1, 2, this is the bottom of the 3, we're putting in the 4, and we have one more small push downwards afterwards. It's hard to tell whether this is the bottom or we're going to have one more push downwards. However, I'm liking the few signs that we have so far. I'm about 50-50 on the counts, so I'm leaning towards the bottom probably being in. Okay, so let's zoom back out, delete some of the stuff on our chart, and assume that the bottom is in here. How do we predict where the next wave is going to go to? Well, the first thing we want to do is move this parallel channel. I'm going to delete the old one and pull a new one here from the bottom of our 2 to the bottom of our 4 in here. It's going to be the baseline of our channel, and then we'll pull it up to the top of the 3 here. We'd be looking for the 5 to come to the top of the parallel channel here, although again, if it goes too slow outwards, maybe this median line would be significant as well. Kind of depends on how long it takes, but this is going to be my first target at the top of the channel. So why do I have this box drawn here? Let's look for some confluence again and see if this box is still accurate from the previous drawing. First thing I'm going to do again is pull our retracement from the bottom of the 2 to the top of the 3. And this is a retracement that we were looking at before. However, now I want to look at this -236 up here, this green line that I have. This is a very common target. And so often when I'm looking for a 5th wave, I'm putting this box at the intersection of this green line and this parallel channel. This is going to be a really strong point. Next, let's look at the wave ratios of the 1 to the 3 and see how the 5 has to play in. So I'm going to use my trend-based fib extension tool from the bottom of my 1 to the top of my 1 to the bottom of my 2 and just pull that sideways. And you can see the 3 is significantly shorter than the 1. This is actually pretty uncommon. However, I don't think this can be counted any other way so far. There's a clear move upwards here. This is our biggest retrace, and then another clear upwards structure before a big retrace again. We could call this a 1-2 and then putting in a 1-2 once again. However, that's a little bit too optimistic, thinking the market's going to skyrocket next. And I like the time ratio of this 1 relative to this 3. This time symmetry looks pretty good here in that they're about the same length in time. So let's just go with the fact that our 3 is a bit shorter than it's supposed to be. It's supposed to come up at least past this 1.0, and this 1.618 is the most common zone. However, our 1 wave was really strong, so again, let's just go with that as our 3 for now. We know that our 3rd wave cannot be our shortest wave in Elliott wave theory. That's one of the most important guidelines that there are. And since our 1 wave is longer than our 3 wave right now, that means our 3rd wave has to be longer than our 5th wave. If our 5th wave becomes longer than our 3rd wave, the count's immediately invalid and we need to look for something else. I'm going to base this count based off of the fact that that will hold true. So I'm going to pull a trend-based fib extension from the bottom of the 2 to the top of the 3 and down to our proposed 4 low. Again, if we put in one more small low, we need to adjust this lower again. This 1.0 line up here is going to be absolutely crucial. I'm going to turn this to red because I know that if the price goes upwards from here, doesn't put in a new low, and then breaks this red line, this count is invalid and I have to restart the count on my entire chart. Thankfully, this is about 20 points higher than our box in here, so hopefully this confluence zone will be the top of our 5th and we don't have to worry about recounting past the top here. Next, I'm going to just pull one more trend-based fib extension from the bottom of the 1 to the top of the 1 and pull it to the bottom of the 4 here. When it's our 3rd wave that's extended, we'd be looking for a kind of 1-to-1 zone once again. However, you can see all of the fib ratios here are actually above that red line. So I don't think we're going to get any extra confluence out of this pull right here. So that's about it for our 5th wave in here. I'm using this parallel channel, the fib pull from here to here, and this red line that we drew is the top possibility for this to hopefully see the 5th wave fall into here. In other words, I'm bullish from about this $328 range all the way up to about $370. Now it's really important to keep in mind that once we do put in that 5th wave, we're going to have another 2 wave. So we want to pull a fib retracement from the bottom all the way down here to our proposed top. And again, this is all theoretical for now, but let's just put an arrow in here and say that we're going to head up to this box by the end of October, it looks like, and then we're going to have a retracement. If this happens, we know that this is a 1 wave on a larger degree, and our most likely retracement zone is this 50 or this 618 down here. In other words, SPY might end up coming down to $295 or $275 at the beginning of November or the end of October. Maybe it looks something like this. So while I think this is already enough information on SPY itself, I actually like to look at stocks themselves and see if their pattern is going to follow what SPY is doing, and see if they can kind of validate each other. My favorite chart to do this with is Apple, since it makes up the biggest proportion of the S&P. Remember that the S&P is market cap weighted. In other words, companies with the highest market cap are the highest percentage in the S&P, and Apple sits at the top of that, around 8% of the S&P. So if we just zoom out on Apple here, we could start trying to get a count on this of all the price history. However, it's pretty clear that we had some sort of top in here, and we're correcting that top right now. I'm going to just zoom in and see if we can validate this correction, and see if Apple's correction is also going to come to a low sometime soon. So the first thing I can notice here is that there's a very clear 5-wave move down here on Apple. We have this low put in, it retraces up to here, the next low down here, we get a nice retracement, and then finally a really deep low in there. This is about as textbook as a 5-wave move can look. Let's just quickly validate that it works. We're going to use some Fibonacci retracements first from the top of our 1 to the bottom of our 1, pull it sideways, and that's a pretty shallow 2. We'd be looking for the 50, but again, this still happens about 14% of the time, so there's nothing wrong with this 2 in here. Next, we'll use a fib extension tool from the top of our 1 to the bottom of our 1, measure the length of the 1 relative to the length of the 3, And if we get that right on there, you can see that this 3 actually comes just past it. The 3 is just slightly longer than the 1 in there, so this is going to validate our 3 in here. Next up, a fib retracement from the top of our 3 to the bottom of our 3. And for this 4 wave, this 38 retracement right in here is actually perfect, right where we'd expect it to be. And then lastly, we don't have much to validate with the 5th wave, but let's just check the length of it relative to the 3 here. And it actually comes perfectly to this 1.272. There isn't really a most common ratio of this 3 to the 5, however the fact that it falls right at these levels is pretty convincing. Okay, so we have this impulsive move downwards. Now, anyone who was looking at this and thought we were about to retrace significantly, this is where technical analysis is the key winner. It's really important to know that Elliott wave states that a 5-wave move like this can never be the end of a retracement. Corrections are never 5-wave moves. So once we were looking at something like this, we should have expected a bull trap to start to come in before we put in new lows once again. And that's exactly what happened, as you can see. So let's look at this move in here. If it's a bull trap, we're looking for a 3-wave move. And I think arguing this as anything other than a 3-wave move is just not right. Look at this. We have one move up, a pullback down here, and then another move up before we start to pull back even further. I don't think there's any legitimate way that anyone could argue this is not a 3-wave move, so this is picture perfect. So this is basically setting us up for a zigzag right now, where we have a 5-wave down, a 3-wave retracement, and now we would need a 5-wave to finish it. In order to validate this, we'll use our fib retracement tool once again, from the very top to the very bottom, and in a zigzag, we're looking for this 38 to 50 zone, and this 3-wave move falls just inside of it perfectly, so this is great so far. So now we need to validate all of the rest of the structure. Does this actually fit into a 5-wave move also? Well, at first instinct, I would have to say it's pretty clear as well. We start up here, we have this move down to here, we have this retracement, and then we put in a bottom that's similar to this one, but pull up again. I think this is going to be an ABC in itself, so I'm going to say our 2-wave would fall into there. Our 3-wave would fall somewhere down here, either this low or this low. Not sure it matters too much right now. Our 4 likely up here on this A, B, C structure that we have, and now we'd be looking for our 5-wave to finish. So the first key thing you can see here is that the 4 comes into the price territory of the 1. This is only valid when we have a diagonal in play, and I'm going to teach you the rules of how to validate that this diagonal is valid. The first thing we want to do is pull trend lines from the top of this 2 to the top of this 4, and the bottom of the 1 here to the bottom of the 3. We'll use this wick down here because it's a little bit lower than the other one. And just extending this line right here, you can see that these lines are moving away from each other. If we were to extend them theoretically forever, they would never cross each other. This means that our diagonal has to be an expanding diagonal. The 2 trend lines are expanding away from each other. Now, expanding diagonals have quite a few rules that they need to hit. The first one is that the length of the 1 needs to be less than the length of the 3, which needs to be less than the length of the 5. So let's go ahead and start looking at that. Let's use our trend-based fib extension tool once again, measure the length of the 1 relative to the length of the 3 here, and as I said, the 3 needs to be longer than the 1 in an expanding diagonal, and it is. It falls below this pink line in here, so that's valid. And now we need to look for our 5th greater than our 3rd. We'll use the same trend-based fib extension, measure the length of our 3rd to the top of our 4th, and you can see it is definitely longer. It falls past this 1.0 line in here. Now once again, if you were looking at this in real time, you might have thought that this red candle in here was actually our bottom. It's a nice doji reversal candle. It had extremely high volume. However, with a little bit of Elliott wave in here, we know that we have to break this pink line for our trend to finish here. So when I was looking at this in real time, I knew that this was about to be a bull trap and we had to go down a little bit further, otherwise my entire count was going to be invalid. But now we're finally past this 1.0 line, so this 5th can be valid in here. The second thing that we need to validate in an expanding diagonal is that the 2 is shorter than the 4. So let's do the same trend-based extension of the 2 here to the bottom of the 3, pull it sideways, and our 4 comes past the 1.0, so that's valid as well. So we have every piece of the puzzle in here for this to be an expanding diagonal. We know that in an expanding diagonal, we're actually very unlikely to come to this bottom trend line. So if we just extend it, it's not a problem at all that we haven't come to the bottom of it. It's actually way more likely to not finish at the bottom here. So if we have this structure and it's this zigzag structure, that means that this first move down is our A wave, This is our B wave in here, and we're putting in our C wave. And I'm going to turn up the degree here so you can see it differently and change the color as well to a white. So now I'm going to measure the length of our A to the length of our C. In zigzags, it's pretty common to see a 1-to-1 ratio here. So let's measure the length of our A. Again, trend-based fib extension tool, pull to the top of our B and pull it sideways. And the 1.0 is pretty significantly far down. However, the other common zone is this 618 here. And you can see that the price actually nearly tapped this to the penny once again. Perhaps the algorithms are front running this by about 10 cents once again. The other way I'm going to validate if we have a bottom in, I'm going to use our Fibonacci retracement from the bottom to the top here. And that same pull that we were looking for on this AB in here, I'm looking for that green line once again, that -236. So you can see it's just a little bit lower. So maybe we do end up coming a little bit lower on here on Apple. I'm going to create a box now to incorporate both of these two things that we just talked about, this -236 and this 618 pull that we had from the previous spot. And then I'm going to clean up my chart just a little bit here, and I'll throw one more fib retracement on this, and it's from the start of our 1 wave to the bottom of our 3rd wave in here. Now in diags, we'd be looking for this 4 to come right into this golden zone when pulling from the start of the diag to the bottom of the 3. And you can see we wicked just past it, so this looks pretty significant and pretty good. And right after that, the target, this -236 again. We've actually already tapped this and we're hovering around it right now. I'm going to pull this box up just a little bit to make sure that I include that in there. So we've got those 3 zones in that confluence box in here, all spread through about a $2.50 range through here. The final thing I'm going to do is use one more trend-based fib extension from the start of our diag down through the bottom of our 3 and pull it to the 4 and just see if we can find any sort of confluence. And you can see the pink line falls right inside the box and actually right where price is right now. Price bounced right off that pink line before coming back down at the end of the day here, and maybe it comes back down to it, maybe comes back down a little bit more. So we have 4 spots of confluence in this $2.50 range on Apple. I'm pretty convinced that this will be our bottom. Either it's already in, or maybe we have one more push down. And if you remember back to what we were just looking at with SPY, it looks to be just about the same, where maybe our bottom is in, or maybe there's one more tiny push down here before our bottom is in. To me, it's a really good sign that both of these assets are looking just about the same with technical analysis, and both of them look ready to bottom in here. And I swear this is the last thing I'm going to do on Apple, just to validate our bottom once more. I see this low we have in here, and this high in here. I can't help but to put a large fib retracement on my chart from the bottom to the top, pull it all the way sideways, and let's look into where we are right now. We're falling right in this super common zone, this 618 to 65 zone, where we would love Apple to fall into. We could expand this box upwards to include the top of the 618. However, we are already below the 618, touching the bottom of the 615. No reason to pull our box up and clutter our chart a little bit more. It's awesome though that the 65 falls perfectly inside of our box, and actually if you zoom in, we're bouncing off of that 65 right now. So I'm just going to clean this up now. We've already validated this whole structure, and we don't really need this all on our chart continuing forward. So just hiding everything besides the fib in here, we have the box that we're looking for a retracement in. Where would our next target on Apple be? Well, just like I've showed you quite a few times, this -236 is going to be my first target. If we come off of here, maybe we start heading upwards to this $150 range for Apple. Of course, if this is some sort of 1-2, we're actually going to be heading up significantly higher. However, 150 would be my first long-term target for Apple here. So there's my outlook on SPY and Apple. I don't think the market is crashing, and I don't think we're going to go downwards much further from here. I think we're actually really close to the bottom, and I've actually started loading up on calls myself. Thank you all so much for watching. If you liked this video, please click the like button and hit subscribe below for future similar content. I really appreciate all of your support.